Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as I go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, see what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com. I dive deeper into all this stuff, looking for potential investment opportunities and sharing it with the community. You can check the description link below for the special we've got going on, which is a coupon code special that is active. So we've got tin here, but it's really talking about gold. Gold spot price so far in 2025, something very big is building. So this is the 50-year average, the 20-year average, 10-year average, and the 5-year average. And that is compared to what is occurring right this second, which is a massive move higher for gold. Now, a lot of people will look at things and say, oh, it's going up, I should buy it. That's not really how I operate. I try buying things that are really low and early, and then let this strength carry me higher. So I would have already been positioned in gold. Most likely in 22, 23 is where I would have positioned, late 22, early 23. When gold bottomed in September, October, and it starts to turn back up, that's generally where I start to get very interested in things. When they're stuck right below a resistance area and ready to break out, especially if the market conditions are ripe for the breakout. And there's many things that were ripe for gold to break out. And that's where I started to accumulate the mining companies and a lot of the physical metals and stuff like that. Here's Marhelm. We've probably reached the bottom and we're seeing the tendencies of a recovery in the dry bulk rates. I agree. And I do think that there are investments around dry bulk companies that would be pretty good right now. Mineral stock investor URNJ, current drawdown has only been exceeded 0.6% of the time since inception, which it hasn't been around that long. Uranium getting hated again, accumulation time. I actually agree with this. I think that it is accumulation time. And I know a lot of people are scared. They're fearful. They're talking crap on Twitter back and forth. They're name calling. They're reverting to things that people would do in elementary school. And they blame everyone but themselves. Oh, what fundamentals? What thesis? Oh, this guy is totally wrong. I hate the uranium pumpers. Guys, you got to start taking personal responsibility and accountability for the positions that you are putting on for an investor. And I think a lot of the guys on Twitter are actually pretty good. I think Justin is absolutely excellent. And he's sharing his knowledge and his research and what he sees for free to everyone on YouTube and Twitter and all these different areas. I think that's awesome. And to see people within your own community, we'll call uranium a community, to see people kind of ripping each other apart just doesn't make sense to me. It's very immature. The uranium bull market is still alive and well, and we'll go over some more charts showing that. But I don't know. I just don't like people ripping into each other. So stock markets, the early warning is behind us. Many stock market indices are now collapsing versus gold. This is another one, the Russell 2000 versus gold, breaking down. So here's a big deal, guys. Look at where we're located. You uranium guys, look too, okay? If you're a uranium guy, look at this because it matters. We broke down and did a retest back in 2002 to 2004. This is when the Russell started to underperform gold. The commodity to stock ratio, looking backwards, it bottomed in 98, 99. It ran all the way to 08, and the precious metals ran to 2011, which is this double bottom here. we just broke out for this ratio. This is the driver of money rotation into your uranium stocks, your precious metals miners, your oil companies, all of that stuff. And generally what you'll see is a slowdown in the stock market, and then they'll lower interest rates and the dollar will fall with it. And that is kind of like this beginning type move. So we're in this bull market, and this is evidence that we are in it, that we're progressing forward. And everyone has zero patience in this trade. I've been in uranium since 2020. I plot money down in uranium companies October, November of 2020. I bought my favorite companies, and I'm riding this damn thing. Now, I added a lot to other sectors along the way and added some to uranium companies. But this is all in progress, guys. The bottom was here in 2020 when this started to turn over, and I got a really good entry point. The ratios were pegged to basically, you were at the bottom. For uranium, the uranium futures price was super cheap. Everything was bottoming in 2020. So I got in when everybody hated it. And I've been buying since. Because if you continue to make money, continue to get dividends, I'm going to reinvest it in the things that are cheap. So I'm right alongside everyone in this trade. This is a driver. The drivers are driving. So stay long. That's as simple as that. Stay long when the drivers are favorable. Putting uranium into perspective, this cycle versus last cycle, you only need to sit and wait. So again, this is your bottom here. I got in what I thought wasn't even the ultimate bottom. 2016, 2017, 2018, you guys that got in at the ultimate bottom, if you're still holding, you are rocket stars. You are ultra patient. I got in here around 2020. I was like, man, this is bottoming. This thing looks ready to go if you're to do across this way in this wedge. And then we started coming on up. We had a big, huge advance phase. And generally after big advance phases, you can get these big pullbacks. The pullback was on short, small red candlesticks. This is going to go up. We're still in the bull market. This isn't a topping pattern. So I think this is accurate. This is Paladin energy from last bull market. Look at how crappy this is. This is what you have to endure if you're going to make it to the top. This really didn't start moving that much till 2005. 2005's in that lower left-hand corner there. And then you can see all the big pullbacks, gut-wrenching pullbacks. When you get these big sideways moves like this here, that's generally wave 4. So you get a sideways action like this. It pulls back about 38%. This one here was 48% because it's a smaller company. And then you get this last wave 5 move. And I think we're coming. I think we're coming right up next to it here, guys. We are real close to a move in oil and uranium and all these different ones. So all I'm going to say to your uranium investors is locate your balls and actually use them. Don't blame anyone else. Fundamentals are intact. And it's not even about the sector fundamentals, guys. What is driving this is sector rotation and money flows. That's what's really driving all this. So this is last bull market, and this is what's coming in this bull market. Make your money on the buy, not the sell. This is true in any investment, whether it's real estate, business, or the stock market. You make your money on the buy. So when people are afraid, when things are low, when they're cheap, you make your money when you buy it. You don't make it on the sell. So here's uranium. Lots of doubters out there, and I think it still looks great. So we've got URNM divided by uranium futures pricing. This is a falling wedge, and we're like primed to move higher. This looks fantastic from a charting perspective. So again, I'm going to repeat, locate your balls and actually use them. Like, don't get scared out of the trade. It all looks good. We've got URA versus UX1 from a larger perspective because it's got history on it. And we're grinding the bottom here, guys. We are really, really low in this move. The money is made on the buy. The money is made when you take an opposite approach to everyone in the market and you buy it and have the patience to hold on with it. I purchased in 2020. That was here as it was coming on up here. I purchased it here. We broke out, and then we had another consolidation in terms of this ratio. I would do another buy down here. We are just as cheap as we were before, and there are still incredible opportunities out there. And this is to remind you, the stock market is a device for transferring money from the impatient to the patient, says Warren Buffett. So that is what's required to make money in this market if you want to make a lot of money. I mean a lot. So uranium's not my largest holding, but I have allocation to it, and now would be a time to start looking at potential investment opportunities where the chart patterns are starting to bottom and turn. And maybe that's when you get that old fractal analysis out. Fractals are repeating patterns over time, and see how this kind of lines up with the pullbacks that we've got. Because I do think that we're getting closer and closer to a potential bottom in uranium. And there's a lot of negative sentiment out there, which is generally a good time to be looking. This is for natural gas. Plaquemines, only 2/3 of their phase 1 blocks are running. And I don't know how to pronounce that. Calcasieu, I guess. Pass undergoing updates that were by end of month, and we're throttling close to 0.5 billion cubic feet per day. So more LNG to come, and you can see what's happening this current year is we have way more U.S. LNG feed gas nominations than before. So it's ramping up in terms of MMCF per day. That's a pretty big difference here. Snowy Window says, there's no pulse in uranium land. This sentiment feels horrible. Sput miners and everything else feels worse than last summer with the yen carry trade. Yeah, that's what's going on at the current time. And I love it, dude. I think it's a good time to be looking. I'd be prowling, guys. Lower 48 gas production is rebounding following last week's freeze-off event. For the upcoming shoulder season, we have revised our estimates to 106.5 billion cubic feet per day, and you can see we've had a decline here. So this was up here. This is MMCF per day, 16,500. This is your billion cubic feet. So this is million cubic feet, million cubic feet versus billion. There are no fundamentals to the uranium trade. Brett is special. Don't be like Brett. So here it is. Brett, we've got the real problem with these and other uranium pumpers is that quite simply, they are and have always been wrong about the fundamentals of the trade. There are no fundamentals to this trade. Circle jerking one another was all they were good for. The original uranium cranium. Man, that's going after it. There really is no fundamentals. Well, everything has fundamentals. I mean, that's like saying this person has no diet, but they're alive. You have a diet if you're alive and burning calories. There's fundamentals. Now, you can disagree with the fundamentals, and that's fine. If you disagree with them, then don't invest in uranium. I'm in the camp that we are in a commodity bull market, and that the sector's fundamentals are less important than uranium being a commodity in a commodity bull market. So I'm in it for what is, in my opinion, going to be a large rotation of money out of financial assets into the circle jerk asset, apparently. which is uranium. And I think uranium is going to do very well, along with oil and copper and precious metals. So don't be like that guy, guys. No one likes circle jerking. Within the past hour, a project that real-time net gas inventories dropped below 1,800 BCF for the first time since May 19, 2022, 10 days ago. Storage is now at minus 255 billion cubic feet deficit versus the 5-year average, and a 590 billion cubic feet lower than this time last year. So keep in mind, though, that days of coverage is less. So even though you're comparing against a 5-year average, your days of coverage is less than what it is on the 5-year average days of coverage. So we're actually lower on a days of coverage basis than before because we've really ramped up demand. Looking at average credit card debt by state, highest as of third quarter 24 was in Connecticut, $9,323, while the lowest was in Mississippi, which is about a little under $5,000. Now, when I take a quick look at this, all I see is that I'm willing to bet that the states with higher incomes have higher debt. And as a percent basis, I bet you they're all pretty close on a percent basis. But the biggest ones are California, New York, Florida, Texas, Colorado, Nevada, and Washington State. Those are some of the bigger ones, and a couple of in the East Coast. Wrong. A healthy market would be a 40% drop in home prices, return long-term affordability. And this one here, Fibonacci Investing, says a retest of 3% on the 30-year bond seems almost inevitable. Housing sales indicate we need at least a 150 basis point drop to keep the market healthy. We are not going to get a 40% drop in house prices, guys. I mean, this is like a crack smoker. I mean, I don't know if, I mean, there's no way. If we get a 40% drop in home prices, like that will be decimation of the system. Like we will see so many bankruptcies. We will see homes. I mean, it would be absolutely incredibly bad. And that would be a move that would be very rare in history. And that's only happened, 2008 had a big move lower, and same with the 1929 crash. House prices was crashing around that time, and a lot of banks had major problems. It was a big deleveraging event. But we don't have the same conditions for this to happen. So this guy, I mean, to come out and say this is like, I mean, that's just saying that he rides a short bus. I mean, that's all it is. that's literally it. But yes, I do think we're going to have a retest. That is a possibility. Does that require a market slowdown? It might. We might have a pause here while rates come on back and basically do a retest of the breakout. Breaking, Florida Governor Ron DeSantis just said he's pushing to end property taxes in Florida. All property taxes should be abolished nationwide. I hope that property taxes are abolished nationwide. I hope. That would be insane. I would be totally for that. Now, Florida, they don't charge a state income tax. So that looks pretty enticing. They could see a boost in house prices too if they were to do that, because people might want to move there. Now, if there was a state like if Nevada were to eliminate property taxes, I know they don't have very big property taxes, but if they were to eliminate it, I would seriously consider it, because I could drop property taxes and I could drop state income tax. And if Trump, I don't know how serious he is, but if he could eliminate the federal income tax, I mean, that would be insane. That's a lot. Right now, my biggest expense is taxes. And that would be insane if I could get all three of those somehow eliminated. Like If I didn't have to pay property taxes or income tax, either state or federal, that would be insane. I'd love it. Shabam Garg says Canada's Trans Mountain Pipeline off to a consistent start with 20 vessel loadings per month from the Vancouver area heading mostly to America and China. With nighttime transit set to be approved later this year, expect to see further export activity to 30 vessels a month. That's quite a bit. That's a good 50% increase. Going from 20 to 30. That's a good amount. And there's quarter four 2025 in terms of vessels. Big jump higher here. I like it. Kiwi Infinity says, so the percent of Gen X boomer crowd owning their house outright has plummeted while at the same time the number still having a mortgage payment is soaring. I thought they all owned their homes outright. Imagine being a debt slave and having a mortgage payment in your 60s. I think I might have a mortgage payment in my 60s still. And I'm going to be laughing at it because it'll be such a low amount. It's going to be like, my mortgage payment will be less than like going to dinner probably at that point. Like, it'll be like, hey, you want to go to dinner? Oh, no, I'm just going to skip dinner and pay the mortgage payment instead. Like, I mean, just think about it, guys. Think 30 years backwards, going all the way back to, let's say, 1990, 5 or whatever. And think of the house prices back then and what their mortgage payments are today. And if they refinanced along the way with lower interest payments, I mean, your mortgage it'd be a joke. It's probably like a couple $100. And that's literally like a night it's like going out to eat at a pretty nice restaurant now. And I think that's what mine's going to turn into. So I don't know. I mean, I look at this, I look backwards, I can do studies backwards and then look forwards. And all of the 30-year fixed rate payments, when you get out 20, 30 years, they become a joke, especially if you've got a low interest rate. If you look at housing data with an 80-year lens, it starts to make more sense. So here's 80 years of house market data. These are the only down years for 80 years back to 1942. The only red, and that was down 1% here, and it was down 5, 12, 4, 4, 4, all in a row. And that is when they just goosed the system with garbage loans. Every single other year is an up year. We even had an overbuilding state in 1990, which was minus 1%. And we had recessions in the housing market, slowdowns, and we had a 3% increase here, which was a slowdown, 7% increase. And then we had another slowdown over here, which we in 1982 had a 1% increase. The slowdown still increased. So, I mean, to call that house prices need to go down 40%, we've never seen anything in history like that. Ever. It's not coming. It's going to continue to work its way on up at some slow pace, just like it has been, is my guess. Logan says, the most housing units ever. Total active listings per the last NAR report Friday was 1.18 million. In 2007, it was 4 million. Traditionally, it's been between 2 and 2.5 million. Name, face, price forecast for 2025 and the last 5 years. Do any brave men want to play? Look how low we are. This is your U.S. total housing inventory. This is below everything in history. Yeah, it's a huge bubble. Where? Where's the bubble? Where's the homes? Show me the money. Show me the homes. Show me the homes. Buyer beware. So a healthy 70% correction would be ideal. This is the number one in overvaluation across the board. Combined trailing PE, forward PE, CAPE ratio, price to book, enterprise value to EBITDA, I don't know what the Q ratio is, market cap to GDP, and we are at the highest ratio. Look at these numbers. 1929, when was the commodity bull market? 1930s. 1966, when was the commodity bull market? Slightly after. When was the commodity bull market? Slightly after 1999. And here we are today, and when's the commodity bull market? Slightly after. If this is the peak in 24 or 25, here we go. Commodity bull market. So commodity bull market, commodity bull market, commodity bull market, and commodity bull market, it's coming. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.